So I think solve the problems that people face in the towns or other places where you are, but learn how to scale up, learn to be frugal, and gather capital as you go along and give them easy technology solutions. Just like Uber, Ola have got a three-click fulfillment, make sure that fulfillment becomes easy. We got 680 million people on the internet, because that is fantastic, isn't it?
Welcome to Prime Venture Partners Podcast, a podcast for entrepreneurs looking to build and grow their startups. Learn about uncommon strategies and common traps from makers and doers of startup ecosystem.
Hello, everybody. This is Sanjay Swamy here. Welcome once again to the new episode of Prime Venture Partners Podcast, where we bring you stories from Digital India, the startup ecosystem, and conversations with some of the most well-known people in the industry. I have a very, very special guest today, Mr. Mohandas Pai, Padma Shri, and chairman of the Manipal Education Foundation, as well as chairman and co-founder of Aarin Capital. Many of you may know Mr. Mohandas Pai from several other hats that he has. I've had the privilege of speaking to Mr. Pai several times on the startup ecosystem and Digital India and several related topics. And that's what we're going to discuss here today. Mr. Pai, welcome to our show.
Thank you, Sanjay. Good talking to you and everybody.
Great. It's a pleasure to have you here, sir.
Thank you.
I wanted to focus today's episode. I know you have a large number of topics you can speak very deeply about. Our audience here is, entrepreneurs and people who are connected with the startup ecosystem here in India and related parties. And I wanted to get your views as you have seen this evolve over the past several years on how this, how you see the years ahead in India, where have we arrived, and what excites you about the years ahead for the startup ecosystem in India.
Well, Sanjay, let me start with giving you some data about the digital ecosystem in this country, because, India is a country with a $2,000 per head per capita income, $3 trillion of GDP. It's a poor country. So many people outside don't know how digital we are. I'll just give you a short introduction. If you look at the digital network, we have 1.2 billion digital connections with 900 million unique phones. We buy something like 165 million smartphones a year. And we manufacture 250 million phones, including feature phones, and export $6 billion, though much of it is assembly with a 25-30% value addition. Data consumption on two networks, Jio is 14 GB per person per month, and on Airtel is 17 GB per person per month. And you can almost get unlimited data in this country at, let us say, $1.50 a month. And that's about the digital network that exists in this country. So we have some of the cheapest data. Then we have a global standard and the largest software service industry. We exported $150 billion of services last year. We have 4.5 million people employed in that area, second largest in the world. Out of 4.5 million people, 2 million work for American companies. American companies have 6 million people in the United States, 1 million are Indians. So adding this 2 million, that means out of 8 million people working for American companies, 3 million are Indians. So we dominate in this area globally. There's no other country like India in software services, even close. And if you look at Silicon Valley, maybe 25% of the startups maybe have an Indian founder. That's the news I read. 35% in cybersecurity. You may have better data. And most high-quality companies have their back-end engineering in Bangalore. Bangalore itself has 2 million people and exported $55 billion of services. Now, this is the base on which the software startup industry has come. I mean, the technology startup industry has come. India today has 50,000 startups. Source for this is Your Story, which has a story on each one of them, and also Inc. 42 from Delhi, out of which 10,000 have been funded all along. Others are not funded. And then we have got $65 billion of capital from 2014 till, let us say, maybe June of this year on a calendar year basis. And the last year we got about 14.5 billion, and before that, $12 billion. And we have got about 40 unicorns. The latest unicorn is PharmEasy, which became a unicorn maybe last month or so. Maybe the next of the year, I estimate another 4 to 5 unicorns, especially in the EdTech area, which seem to be booming. and they employ 750,000 people. In the software service industry, of the top 10 software service companies by market value, 5 are Indian, top 5, 3 are Indian. Of the 2 million employees there, 1.5 million are Indian. So we have a huge amount of intellectual capital, huge amount of human capital in this country, all highly trained, very productive, and young people. The average age in the service industry is 27 years, which matches India's average age of 27 years. On top of that, we have this software service industry. This technology industry, startup industry. We have 5,000 startups coming up every year, out of which maybe 1,000 get funded. And we estimate by 2025, we'll have a minimum of 100 unicorns in this country. And we possibly will have 100,000 startups. Maybe 15, 18, 20,000 would have got funded. The rest will be small companies which are still alive, or maybe in a zombie state, etc. But all of them are trying to solve some problem. So we're seeing this upsurge of innovation, upsurge of people getting into startups and starting in a variety of areas. Now, are they all high-tech companies? Maybe 10, 15% of the ones funded are very high-tech companies working across technology areas in artificial intelligence, machine learning, biotechnology, deep science, etc. Many of them are doing B2B businesses, which is the largest sector across a variety of industries. And we are maybe in terms of technology 2 years behind Silicon Valley, even though some of the cutting edge work is done in Bangalore. And if you look at China, China as an economy in this area is ahead of India. They have solved many more problems using AI. They make enormous investment. They said they committed $150 billion to AI by 2022. And there's a cost to the risk to the United States too, because they want to dominate the world. And of course, they put in a little bit of money. Out of $65 billion, SoftBank has put in $10 billion. The Chinese put in $8 billion. The government has said that we don't want Chinese investment unless they come and apply, and we have to give you permission, etc. There is a challenge because of some border issues. So this, Sanjay, is a big story. And going forward, this is the third largest ecosystem for startups in the world. And this is a place where you're going to see much action. Now, for most people, you will all see that in China, they invest $65 billion a year in startups, about 60-70% by Chinese companies. And if you go try to invest there, well, you have to tag along with them. Otherwise, you may not get great deals because it's a market dominated by local Chinese. United States, of course, a market dominated by many big players, $135 billion of investment into startups every year. And in India today has become a battleground for global companies. We have the US venture capitalists come, very less from Europe. We have the Chinese who had come, the Japanese are coming, the Indians have only 10% of the capital. So this is the place where anybody can come and get a entry into a investment into a startup which can do business in the US, business in Europe, and I think take the market here. So I think this is going to be the hottest place in startups and technology for the next 5 years, where investment is welcome and people will make a lot of money.
Fascinating. Now, these are amazing numbers, sir, and thank you for the quick overview there. So if we deep dive and peel the onion back a little bit, if you think about the first wave of startups that have grown up here in India, we had the e-commerce wave, where obviously Flipkart was the one that emerged quite significantly. And then, of course, we've had the financial services, fintech area, where there have been a lot of companies, notably companies like Paytm and PhonePe and several of the younger companies now coming up. And then we've also got now, Byju's in the education space and other companies in education, edtech, and digital health is now also another large area that's coming up. And first of all, of course, we had the government's investment in Aadhaar and UPI and the whole India stack and now the digital health stack. And broadly, the belief is that India is going to, while it's an opportunity that might be very large, the solution space in India is going to look quite different from what happened in the US or what happened in China as well, right? India will have very unique aspects, as we have seen. Can you elaborate a little more on some of the thinking behind that and why you see India as being large but a different opportunity as well? And what are the areas that excite you the most?
Well, I think in terms of verticals, edtech is obviously exciting because we got 265 million kids in school. There's a 50 million market for edtech companies. We are 37.5 million people in college. That'll go up to 70 million by 2030. And there's a 60% of them can afford to buy technology. And most of the schools and most of the colleges here are now going digital with a vengeance. So that's going to be a big market, and that excites us because I think the B2C market is very much bigger. The B2B market is tougher. And in B2C, we are seeing a lot of action. We are seeing startups which are having a lot of videos and using videos to reach out to people as platforms. We are having active tutoring coming. We are having tutoring for kids in the age group of 3 to 6. And then we are having it for K-12. We are having it for college. So EdTech is one big industry. Health tech is suddenly taken off now. It was there for some time, but the market access was difficult. Now the regulations have been eased for health tech to use, let us say, telemedicine, so that doctors can consult on telemedicine. It's very official because there were regulatory challenges. All hospitals and care providers are now looking at technology in an extremely big way. And the people too are looking at consultations, etc., with the doctors. And now many of these health tech companies are gathering enormous amount of data. We always remember Watson for having data on oncology. Now they're getting a lot of data and collecting. And we have the world's largest insurance program called Ayushman Bharat, which has about 500 million people, which is the potential for India, which is funded by the government. Already about 12.5 million people have got services done in hospitals in the last 2 years. And when we had this app given by the government to track COVID, there were 50 million downloads in 13 days. The world's fastest number of downloads after Pokemon, which took 19 days to reach 50 million. And now on this, enormous amount of data is going to come because we got a public utility called the health stack, a government health stack, where data will be there, consultations can be done, payments can be made, etc. And that will gather the largest quantum of data on the human condition across many ailments anywhere in the world in the next 2 or 3 years. It is just like we had the India stack, which had Aadhaar, by which we had 1.2 billion people come on and get a unique number. We had UPI, where 1.6 billion transactions are done. You can transfer money from one mobile phone to another, almost without cost, in 30 seconds, seamlessly, which goes through the clearing system of the banks itself. It's not a wallet. It goes to the banking system. It's enormous. And digital payments have taken off, etc. So I think fintech is another area which is taking off, both in lending, both in getting the data out to find out who can borrow money, in the SME lending, and in the stock market trading, in using artificial intelligence to do back testing for derivatives market, and also in bond trading, in all facets of fixed income, equities, and also in derivatives, in gold, etc. A lot of companies come. We have some investments. And then we have some deep tech, biotech companies which have come up, which are very long term, which are trying to find a cure for many diseases, which are doing an active work in developing new APIs, which are doing active work in using AI to create databases to come to a conclusion about the ailments that people have. You have invested in one of the latest one, which is doing very well. And then they're doing in research, like we have a company which is getting into, superbugs. They're close to coming out of the product the next year. And I think they've done a great job. They're among the 2 or 3 top people in the world. And as horizontals, a lot of companies coming up in AI. I know when you talk about AI, every kid seems to be doing an AI company, just like everybody did an app company all over. But I think this AI is becoming all over the place. Yes, there are maybe 100 companies doing deep AI, very high-tech AI, which is really world-class. The rest of them are all using algorithms, using simple AI to get the data across. But the mentality across has changed. We have electric vehicle companies which are doing fairly well. I think they're growing up now because after COVID, mobility will change, and climate change has become a very big issue. So mobility, IoT companies are coming up with the smart city. So Sanjay, I can go on and on, but I think a lot of companies in very high tech as horizontals and in various business verticals are coming up. But we must remember one thing, Sanjay, the total spending on software, on everything else, excluding e-commerce in India, is maybe $35 billion. It's still a small market. E-commerce today, this year, could be about $20-25 billion, but it's growing in double digits, maybe in the 25% plus as a marketplace. And since the market is so big, we are a $3 trillion economy. We could be $5 trillion by 2026 and $10 trillion by 2031, 1 year later because of COVID. I think the market expansion in this country and growth will be enormous. All of them, I guess, with a lot of assimilation and everybody going digital, will do extremely well.
Great. So switching gears a little bit to the, doing business in India, right? I think definitely people looking at it from the outside have always looked at doing business in India with the question of, is it easy to do business in India? And companies over the years. You have been very actively involved in trying to help make India an easier place to work with and improving policies. Where do you see that journey now and directionality wise? What should people be expecting?
Sanjay, I helped build Infosys since 1994. Infosys today is a $13 billion, $55 billion market value company with 250,000 people. One of the globally dominant brands out of India.
Absolutely.
So we've been in India. We build campuses, we build everything else. So building companies in this country is not difficult. Doing business is not very difficult. And you've got so many 50,000 startups. It's not difficult at all. India has a bad media, bad press. We criticize ourselves too much. And over the last 25 years, a lot of things have happened. There are one or two challenges that we have which need to be solved. And I'm sure the Modi government will solve them. That is, in Forex, we don't have capital convertibility. So money coming in requires documentation. Money going out requires documentation. We've taken up with the Reserve Bank of India to ease the documentation. With $545 billion of reserves, hopefully they'll be doing something. And in the tax area, for unlisted companies and startups, the tax capital gain is 28%. We asked the government to abolish it. A parliamentary committee has said we should abolish it. And they also suggested that if we don't abolish it, bring it down to the capital gains on listed stock, which is just about 11% with the surcharge. So I think these are the two big issues. And I think the next 1.5 years, hopefully, we'll see greater development. But in all other issues, I think, India is a great place to work. There are 75,000 IT companies in the services area, 75,000. 450 of the 500 Fortune 500 companies get their work done out of India. And there are maybe, 2,000 multinationals already working in India in the technology area. Now, all of them won't come if things were difficult. And every year, India absorbs 12 to 15 million square feet of grade A office space in all companies coming. So we got to see this upsurge. We got $75 billion of FDI last year. This year, we could do more. Of course, FDI to the stock market, FDI in companies, etc. In the last 6 months, there have been reforms in labor laws. There have been reforms in defense area. There have been reforms in the agricultural area. So a lot of reforms have happened. So India is a very different country. Yes, it's only a small economy of $3 trillion, but it's growing rapidly. And so I think there are opportunities all across the place. And the ease of doing business is not as difficult as some people make it out to be. You must ask all those people. Of course, there are some policy flip-flops because when government makes policy, they have to balance the views of many stakeholders. For example, in e-commerce, there are maybe 50, 60 million mom and pop shops. You can't afford them to be thrown out because they have no alternate source of employment. So government wants e-commerce companies to be platforms where all of them can go and not to, dominate the market like, Amazon does in the United States or elsewhere, or right. Baba does in China, etc. So, things are much better today than they were 5 years. 5 years back was much better than 10 years before that. So I'm very, very optimistic about this country.
Fabulous. So a couple of other things would love for you to elaborate on and share your views. So obviously, the internet, when it came into India, came into the metros and, gradually expanded out and, started with the more affluent class, and over a period of time, thanks to mobile data and certainly with the launch of Jio, kind of suddenly, had a step function growth and a mass reach. And as you said, the consumption of data per capita is very high here in India. And the solutions that the phone was used for, initially a lot of it was around entertainment and video consumption and things like that. But now people are starting to use the internet and mobile internet much more for actually solving business problems, and going away from just the metros to, the tier 2, tier 3 and the remotest parts of rural India now. From an advice to entrepreneurs perspective, when you look at what problems we should be tackling and solving where there are opportunities for building outsized returns, how do you see the role of both entrepreneurs from the smaller towns in India, as well as the opportunities for all entrepreneurs in those geographies?
Sanjay, that out of 1.38 billion people, maybe 300 million people are the middle class by our standards. When you say middle class, per capita income of say $4,000. Okay, $4,000 will give you $1.2 trillion. The rest of them could be maybe $1,200 or $1,300 or whatever it is. And this $4,000 in PPP with a multiple of 4 is something like about $17 trillion. I mean, $17,000, right? Mm-hmm. So that passing $10,000 makes it a big market. So you must segment the Indian market and look at all that. And much of it is urban. A little bit, maybe 20% is in the smaller cities. So I would urge all entrepreneurs to look at people's problem and solve them. Which are the problems? We have massive problems in agri-tech. What are the problems in agri-tech? In agri-tech, connecting farmers to markets. Now, agri-tech, agriculture is 15% of India's GDP. That means it's about $450 billion. Half of it is grains. So remove maybe $250 billion. There's a $200 billion market for consumers. How do you connect farmers to market? Now we are seeing more than 600 agri-tech companies come up. They've got apps. They're training the farmers. They're connecting to markets. They increase the value that farmers get and increase the income tremendously. And people are able to get good produce at reasonable prices. The sorting, grading, supply chain has come up, and all of them are growing. They require more capital, but I think they will grow. So I would urge you to look at that. Second, look at local languages. Local languages to give local information, connect to the districts, connect to society, etc. Get them entertainment, get them everything else. I just read about a OTT platform which has got maybe about 45 million people for Bengali, and is growing 150%, 200% year on year. I mean, I was fascinated by that. It's a pure Bengali. We got multiple languages. We got 29 states. You can do it across maybe 15 major languages, and each one of them can give you 50 million people. And that will pay for itself for a period of time because the content is there, everything is there. So local language news, local language media, local language entertainment, local language other things that people want is something that you can do. And then education in the local languages. You must remember that, maybe 75% of India is still getting educated in local languages. They don't know much of English, but local languages. So I think solve the problems that people face in the towns or other places where you are, but learn how to scale up, learn to be frugal, and gather capital as you go along and give them easy technology solutions. Just like Uber, Ola have got a three-click fulfillment. Make sure that fulfillment becomes easy. We got 680 million people on the internet, because that is fantastic, isn't it? Out of 1.2 billion mobile connections, 680 million are on the internet. We don't come in the top 25 globally for the internet because, nobody is a large country. When you look at global rankings, don't get carried away. You can't compare Singapore with India. Singapore is 55 million people. India is 1.38 billion people. So when you have 680 million people on the internet, you are very large. But you'll not come in the ranking because they'll say internet penetration. The penetration rate could be low. Even China is low. They got 900 million people on the internet. But you got to look at this. So I think the local problems are something that they can solve, and also create a network of investors and angels in your own area willing to give you smaller amounts of money till you scale.
Thank you. So these are really fascinating opportunities that you've been describing that are sort of fairly invisible still to the mindset of the entrepreneurs, right? Because they've still been solving, for the most part, the problems for the urban customers and solutions that are variants of what has existed and worked in other markets. On the use of technology and scaling up of solutions through much lower cost solutions, of course, we've been delighted to have the initiatives by the government on Aadhaar and India Stack and UPI and GST and all of these initiatives. What opportunities do you see for the private sector and startup ecosystem to work with the government because the government is obviously one of the largest potential customers of technology. How do you see those opportunities and the willingness of the government to engage with the startup ecosystem?
You see, government is very willing to engage with startups. They want to encourage startups. But we have a challenge, Sanjay. I want to be honest with you. And the challenge is, government is unsure how to do it. They have to go to the tendering process, even though they cut the rules to say we'll not have tendering. They go to L1, then the payment doesn't come on time. There are a lot of challenges. So you have to suffer those challenges because the government is government. The system is streamlined in some areas is not streamlined. So you must engage with government. But the bigger thing which I would urge you to look at the platforms that government has created and see how to use the platform. Aadhaar is a platform. With Aadhaar, you can get an Aadhaar number, you can make money transfers, you can go sell to them, you can get everything else and use the data. Payments. We got the India Stack where 1.6 billion payments are made every month. Now it must have gone up last month in September. And I think that is very easy to make
the numbers just came out for September. It is 1.8 billion.
1.8. Sanjay, 1.6 to 1.8 is fantastic, isn't it? 10% plus growth month on month.
In 1 month, yeah.
1 month, amazing. And at hardly any cost. So you got that kind of
and to put it in perspective,
yeah, go ahead.
Yes, I was just saying, to put it in perspective, card transactions have stayed stagnant at about, I think, 0.2 billion, right, over a month, like 200 million a month. So one area is really, UPI has really been continuing to grow. And I think the growth is equal to the total card volume in a month on month.
Absolutely. And here, the important thing to understand, they're all public platforms. You don't pay a cost. There's no cost.
Yes.
In either country, it'll be controlled by somebody. You have to pay a heavy cost. Like in the Play Store now, Google is saying, pay me 30%, right? Apple is already taking 25, 30%. You don't have to pay the cost. So your cost can be low. Now the health stack is coming, and health stack is well underway because all the data will be input in the next 1 or 2 years, and you can use that. I would urge you, look at all the things that the government has done and use the systems and processes available as a public utility to dominate the market. We got about 60 payment companies. Well, many of them may not survive because they're not having good revenues, but some of them will be world-class companies in a short while because the technology is fantastic. You can, do it in a wink of an eye. You can transfer money. So the health area, education, now we have a digital challenge. And I think in the next maybe 2 or 3 years, we will have another 100, 150 million kids get a tablet with preloaded software. And the governments are going to come and get it done because there is a push from the parents that their children don't have in the rural areas a tablet or something like that. And in a democracy, political leaders respond to people. So I think that market in local languages will be available. And if you're able to give a leasing model where you tell the parents, pay me 200, 250 rupees a month, and I will give you this model for 3-4 years and try to work out a revenue model, it will be fantastic. So there are alternate models also. And then in clean energy, in electric vehicles, leasing of electric vehicles, etc. What we need, Sanjay, in all these areas is business process, business model innovation. See, we are not seeing much of business model innovation. We've seen technology innovation. We need business model innovation where you reduce the monthly cost of all these people who can use. Then you can dramatically increase the volume of business. And with interest rates now down and capital becoming more easily available, that should be something that people should try to scale up. So I think all these things are coming up, but you have to choose an area. You have to make sure you've got access to capital. You got to make it user-friendly for people to use, no heavy technology, because the ordinary person doesn't care what technology you got at the back end. All they want to know is, can I use it easily? And I don't have to exercise too much of my mental faculty to make things work.
Great. No, absolutely. I think these are really some of the exciting platforms and some of the early successes. And we have seen several companies, both in our portfolio and in the startup ecosystem, things around, in particular, the use of Aadhaar and GST and payments, things that were almost impossible to do, right? Opening a mutual fund account, and you were deeply involved in helping facilitate that regulation, right? Merely with an OTP for up to 50,000 rupees at virtually zero cost, right? And I think one of the examples I had read there was that the cost of opening a mutual fund account was somewhere between 500 and 1,500 rupees. And at a 0.5% margin, that meant that you had to save a minimum of 400,000 rupees a year to make it viable for the account opening. And less than, I think 40 million Indians can save that kind of money in a year. So just by driving that cost down to virtually zero, we've enabled people to save as low as 10,000 rupees a year. And suddenly that makes the market size probably 10x, right? So sorry, I think it was 4 million people could save.
Yeah, now we got about maybe about 100 million people who got demat account.
Yes, and who are capable of saving, and because the cost of just onboarding them is so low, right? So that's a fascinating example. And of course, we have the story of Jio, which went from 0 to 300 million plus subscribers without a piece of paper, not to mention the environmental benefits of a lot of that. So one of the other areas, obviously, that the startup ecosystem thinks about is, the exit opportunities and potentials in India. And of course, very recently, we had the all-cash acquisition by Byju's of White Hat Junior for $300 million, which is obviously a watershed moment. What are your views on how liquidity will be achieved? I know there's talk of private companies being allowed to list overseas, etc. How would you look at those questions from either the entrepreneur's perspective or certainly the LP and investor-based perspective?
Sanjay, the public markets in this country are deep and wide. Right now, we have an IPO boom. Maybe $20 billion will be absorbed through the IPOs this year. We're seeing a huge boom coming. And this market rewards high growth companies. Whether you make a profit or loss, they reward high growth companies. For example, you can see in the FMCG area, the PE is 70, Sanjay. They're growing at 7-8%. The PE is already 70. Why is that? Because they see it as a hedge against, as a defensible, right? So there are many companies with PE of 50, 70, etc. who are not growing. There are many companies which are growing 30, 40% plus, which have got a PE of 40 or 50, because the high PE catches up after a couple of years with the growth. So this market in the public market is hungry for high growth companies. And if you're a high growth company and you establish your business, you see growth for the next 3 or 4 years, go to the public markets. And if you go to public markets, your stockholders can sell after 1 year at a very low rate of tax. You get access to more capital, but you must develop an ability to go market. Some of the startups who went to the public market have not done a good job of investor relations. You must market to investors constantly. You must go meet them. You must go meet new investors and create the story. The story will sell. When I was CFO of Infosys from 94, I used to meet 300 investors a year. I should be on a roadshow every quarter, even though we never raised capital till 1999. And then we made $1 billion ADR in 2002. So I think you must go market. The key thing is you must market yourself for capital. You must go to all the people. We got a mutual fund industry of about nearly $400 billion, out of which $200 billion is in equity. So we got huge markets here. Market capitalization in India is close to $2 trillion. And the market is hot. There are 1,700 FIS. A lot of people are waiting to put money. And you may raise $1 billion, $2 billion. Is no big deal. Companies are raised $3, $4, $5 billion in this country. And I think you can raise that. So look at the public market. The second thing is you must go meet India Inc. and talk to them about what you're doing. For example, in the EV, Hero Motors has put money into one of the EV companies. We have seen the TVS Group put money into EV companies. We are seeing the JSW Group put money into some startups, etc. And you must go to all those companies. The IT service companies are buying companies outside because for them it's strategic to get access to the market. They don't have much of a market here, but you must go market to them. The key is, our startups feel it's easy to go to venture capitalists and thus to market. But after you have got your capital, you must get an external source because all the venture capital require exits. And if you want to give exits, there are practically 5 ways of doing it. You can go list outside. That is fine. Then consider listing in India, because listing in India, you can get a good valuation and the market will reward you and give you more capital as you grow. And once you list, the price settles down, then investors can sell in the market directly or indirectly. Third, get acquired by a company in this country. And the fourth, get acquired by a company outside India. And the fifth, go raise global debt and adjust your cap table because, beyond a point, you may not require more equity capital. You may require more debt to grow. So I think the multiple areas. But the point is, Sanjay, the CFOs in the startup space are not very well versed about all the multiple areas. They're not trying. I've not met any big names in the CFO world among all the startups. When we were growing Infosys, Sanjay, we wanted to get marketing people. We got them from the big FMCG companies because they know how to sell. They're the brightest of the bright people. And we got good techies from some of the manufacturing companies because they've done great work. We got some techies from some of the banking companies, especially the multinationals. So I would urge you, all the bigger companies, get CFOs from some of the big India Inc. companies who have gone to the markets to know how it is and create the network. So I think you must look at public listing. And public listing is good, taking off in this country in a big way. It is a huge market. And I think that will be very good. And once you look at public listing, you get a currency for acquisition. You get access to more capital. Tax rates come down. And I think it'll be very good. And of course, acquisitions is already there. I hope more and more of the big startups start acquiring to consolidate. I see that trend coming in the next 2 or 3 years, Sanjay, for a very important reason. The PE industry is now investing in startups because the PE want them to come to a certain stage. Many of them have come to that stage where they want to invest and they are clearing the cap table of all the companies. And then I think you should be able to go to the PE companies and then they'll hold you for 5 to 7 years before they sell you off. And then I've been talking to Mumbai about starting some funds for secondaries. Now I was talking to a banker who said this year they're going to personally enable $2.5 billion of secondary sale. $2.5 billion, Sanjay.
Yep.
As one bank. And we have spoken to some of them to start a fund to buy secondaries. Why can't they buy secondaries at 10, 15, 20% discounts before they raise capital, which could see a bump up another 40, 50%. So there's a good market for secondaries in many of the companies. There are more than 125 unicorns who have potential to become unicorns in the next maybe 4 to 5 years. And Sanjay, my last point on this is, today, there is close to $45 billion of sovereign debt, out of which maybe 50% is got negative interest rates. And $15 trillion of stimulus money is coming to the market. And interest rate, the Fed has said, will be 0.25% till 2023 now. And that means there's going to be surplus liquidity. Money is there. You have to go market yourself and you got to sell. And I think this year too, we'll see the upsurge of money coming in. Reliance has already got $20 billion. They'll get another $10 billion. So I think this money is there. You must go and market. And these are all the ways.
Wonderful. Definitely appreciate all your insights here.
And Mr. also, Pai. Sanjay, I would like venture capitalists like you to encourage your companies to go to the public market. Because I see a reluctance about many venture capitalists to say, no, we don't want to do that, blah, blah, blah. Because maybe they feel that they will not get the prize, they'll not be able to raise capital, and they will lose their special rights. But I would urge them, think about it in a bigger way and work with the founders to go to the public markets to get very outsized rewards.
Absolutely. I think we are certainly motivated to build these lasting companies, companies that are visible in the local markets and are earn the trust of the common man here in India and are serving the local community, solving local problems. And I think, Sanjay, as you say, that's where the most stability is going to be.
Yeah, Sanjay, yes. I want to intercede here. People used to ask us when we were a $75 million company, why did you go and list in NASDAQ in 1999? And we told them, we went to NASDAQ not to raise capital. We wanted to raise $72 million on a $3 billion market value, and we got $5 billion of book, all right? But $72 million is peanuts. The cash remains in the balance sheet, remains even today. Because, it's a cash surplus company, it needed the cash. But we wanted to list there to build a brand. If you're listed in the NASDAQ, about 60% of business comes from America, there's a brand. When you go to a customer and say, we listed on NASDAQ, there's a brand, there's a trust, there's a brand. They can see a stock price every day. You disclose information about available. Second, we said we want to create options for our American employees and global employees. You can create stock options. Third, we want to create a currency for acquisitions overseas because it becomes easier, right? Now, you must look at this money listing in the markets as one, raising capital. You may not require the capital. Second, giving liquidity to your investors. Third, giving liquidity to your staff for ESOPs. And fourth, creating a currency for valuation. And fifth, building your brand. There's a very big company in the travel space which is listed in New York, not in India. But if you're listed here, your stock will be traded, your brand will be traded, you'll be on CNBC, ET Now, and all the business channels. Every now they will talk to you because your business is here. If your business is here, you're listed only overseas, you don't get the brand value in this country because the people don't talk about you so much because you're listed overseas. A listed company is traded every single day. News comes out about the company every time. It trades up and down. Something happens. And when you give a quarterly numbers, if you do very well, the stock price goes up. Everybody knows about it. Many investors buy it to create a great following. The brand value of that is fantastic, Sanjay. That's what people should understand.
Right. Absolutely. So, these are really valuable insights, Mr. Pai. I think everybody who's touching the India story and the India ecosystem, I think really high quality data that is, I am amazed at how you are constantly on top of this data and can reel it off at the top of your head, at the top of your mind. Thank you so much for sharing these insights with our audience. And I'm sure this podcast will have a lot of questions and comments, and we'll be posting it publicly, and of course request you to comment on them as the questions arise. Thank you so much for your time.
Thank you, Sanjay.
Really look forward to this exciting next wave of growth here in India. Thank you.
Thank you, Sanjay. Great talking to you.
Thank you, sir.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.